AVV Nation, what's going on? It's Patrick here at VectorVest, bringing you a brand new video here today. We're going to be taking a look at one of the most popular Wall Street bet stocks right now, which is SmileDirectClub or SDC. I don't hold any shares of this stock in my portfolios, so this will be a completely non-biased view. And we're going to take a look at some of the headlines, see what the company is doing. I know there's a lot of talk about this as being a potential short squeeze, but also a potential long-term hold. So we're going to look at it from both views and see if we can find if this is a good play or not. So if you're ready to learn more about the stock, make sure to smash that like button, hit that subscribe button in the bottom right, and let's get into it here today. All right, so jumping right into it, let's start off by taking a look at a recent article I found on Yahoo Finance talking about what the company is doing, about their most recent earnings report that they had, and where they're at currently as a company. So we see here that the company is making some money right now. Yes, they are growing their sales. Yes, they are selling more product currently, but because COVID is lasting a little longer than they expected to, especially all across the world, they haven't been able to meet their recent projections that they were expecting to have, or their sales numbers that they were expecting to have by this point. And therefore, they're fueling their company growth by a lot of debt currently. And if we come down here, one of the interesting points that I wanted to highlight is that the company reported a net loss of 55 million, down from 95 million the prior year, which granted is still less of a loss, but they're still losing money right now. They're burning cash left and right. And if we come down here, despite the 377 million in cash and equivalents, the company also has to cover $716 million in long-term debt. This is not a good sign. If you break it down by year, it looks like it comes out to about $50 million every year in interest expenses alone. So the company is burning through cash left and right. Now, I know that talking about fundamental analysis really isn't the biggest concern for anybody talking about a short squeeze on a stock, but this is something that you definitely need to be aware of, because if the company is burning through cash as we're seeing right now, they may have to put a share offering out there, which would dilute the float, which would hurt the ability for the short squeeze on the near term. And then on the long term, they're still facing the long-term debt issues that we've just talked about. So this is something you need to be aware of, especially if you're looking at it from a short squeeze perspective, or even as a long-term buy and hold type of play. So that's where we wanted to start off with today. Now, if we come down here, as I was mentioning earlier, for the third quarter, the firm is forecasting shipments of 83,000 to 87,000 aligners, which represents an increase of about 50% from the second quarter. Yes, this is great. They're definitely picking up quarter over quarter. But with all the COVID issues we mentioned earlier, they're still down on a year-over-year basis. And then on another note, one of the other things that we want to talk about, as it states here, a saturated dental market. If you're not familiar with SDC and their competition, they are trying to chase the leader, which is Align Tech, which we'll look at here in a second and compare the two as well. And while they are making strides forward to improve their business and to try to take some of that market cap away and add it to their own company, they seem to be struggling a little bit, or not really meeting the pace that they were expecting to be meeting. So from a long-term perspective, it definitely brings some concern here. If we scroll down a little bit, getting into the bottom line, as we can see, the official reported number is 33% of the shares currently out there of the free float are held short. But as I mentioned, dilution seems to be a substantial short-term risk for the SDC stock. And I completely agree with this. All right. Now let's go ahead, take a look at the chart, because I know this has been a popular one over the last week or two. So let's take a look at the chart and see if we can get any signs of what that tells us. So let's jump right over there. All right. So we've got a basic chart here of SDC, and just to make sure everybody's on the same page, as always, we see the price shown in candlesticks. That blue colored line is the VectorVest stop price, which is based upon a 13-week moving average that we adjust per the company's fundamentals. And then below that, we have the RT, or the relative timing. This is looking at the short-term price trend of the overall stock. It's cast on a scale of 0 to 2. Above 1 shows the short-term trend of the stock is up. Below 1, the short-term trend of the stock is down. And then below that, we have EPS or earnings per share. Once again, if you're looking at this from a long-term play, earnings is definitely something that you want to pay attention to because as we say time and time again, earnings is the engine that drives stock prices higher over time. And if a company is making money, you'll see this earnings per share number going from the bottom left to the upper right. As we can see here, had a little bit of an uptick, but now starting to drop back down. Could be asking yourself why, and that's because VectorVest earnings per share number isn't just looking at the raw data every single quarter, but it's also taking into account a forecasted earnings per share 12 months down the road by major analysts as well. So when we see this drop, not only is the company not making money, but analysts expect them to continue to lose money 12 months down the road as well. And then last but not least, I did add on volume here to the chart because we've seen over the last 2 weeks or so a lot of talk about SDC and a lot of potential squeeze plays coming in. I've gone through the message boards or the chats there and seen a lot of people saying continue to buy over the next week or two. We should see a huge spike, but volume is conviction. Volume actually tells us a lot about what's going on with the stock. And as we can see, we did see a pretty big spike coming in a few weeks ago, but pulled back, and then a second semi-spike, if you will, right here, right around 6th of October, last week or so. And then since that point, we've been slowly drifting lower. So at this time, we're seeing less and less buying pressure coming in. And for a short squeeze to be effective, as we saw back in January with GameStop, BlackBerry, AMC, all of those, you need to see continued buying pressure. And what we're seeing right now just doesn't really show that. In fact, we're seeing less and less buying pressure coming in and more selling pressure coming in. So just the opposite of what you want to see for a short squeeze play. Just taking a look at some quick analysis on a short-term basis, off of those lows we had here, about 450 or so, yeah, we do have higher lows putting us in an uptrend or a slight uptrend. But at the same time, when we saw those big spikes in volume come in, we now have lower highs. So we're really seeing consolidation, or what I like to call that wicked wedge. As you can see here, we have the lower highs, and then on the bottom, higher lows. So until we can see a breakout just from a technical perspective from this wicked wedge, I would recommend being patient, waiting for the trade to come to you. Don't take that added risk for a stock that could potentially be diluting their shares in the near future on a short-term basis, because you wouldn't want to buy in now when it's moving sideways and then have that come out and then see the stock drop drastically. Also, from a longer-term perspective, if you're waiting for that earnings announcement that they have coming up, I believe next month or so, be careful with that. We're looking at it here. Yes, sales numbers are up quarter over quarter, but the overall trend of their earnings or the overall bottom line of the company is that they're losing money and they're burning cash fast. So with that, be careful with this one. Now, if there's something I didn't cover, by all means, let me know down in the comments as well. Let's get that conversation started. Once again, I don't own any of this in my portfolio. This is a completely non-biased opinion on what I see here. Just simply going off the charts, going off some of the headlines and seeing what the story is really telling us. So now that we've talked about SDC, let's see how it racks up against their competition, ALGN. So I'll get out of here, add in ALGN, and we'll compare the two of them together here. Starting off with SDC. So as always, we get the basic information, the company's name, the symbol, the exchange, the price, dollar change, percent price change, but then we come to the value. And the value is where you really start to see the benefit with VectorVest that you're not going to be able to find anywhere else. The value is what we currently feel the stock is worth, and the way we use the value is we compare the price of the stock to its value. So the price is trading at $5.85, value is at $1.55, showing that that price is over its value or that the stock is overvalued. Now, Align Tech is also overvalued as well, but at a lot lower of a ratio than what we're seeing with SDC. After value, the next four indicators that we're going to be looking at here today are cast on scales of 0 to 2. And as always, VectorVest makes it simple for any retail investor or trader out there, because if you can remember above 1 is being good and below 1 is being bad, this system will make your investing life a lot easier. So we start off with the RV, or relative value. Now this is looking at the long-term potential of the stock over the next 1 to 3 years. We look at them, RV for SDC is below 1, so that's poor long-term potential over the next 1 to 3 years. ALGN above 1, good long-term potential over the next 1 to 3 years. The next indicator is the RS, or relative safety, and this is the amount of risk involved with any stock in the database or any stock in the US markets. So if it's above 1, that shows less risk involved, below 1 would show more risk involved. Well, what do we see here? SDC has an RS rating of 0.53. ALGN has an RS rating of 1.5. If you're looking at this from a long-term play, which one would you rather have your money in? That's right, ALGN with an RS rating of 1.5. That's an extremely high relative safety rating here. And then last but not least, the R-tier relative timing looks at the short-term price trend of the stock. Now this is the only one that SDC beats ALGN in, but they're both not great right now. Markets have been pulling back. SDC has an RT rating of 0.91, so showing us that it is in a downtrend. Same as ALGN at 0.72, it still is in a downtrend. Now, SDC is in a slightly less of a downtrend than what we see with ALGN, but they're both steadily trending lower. The way I would read this from a fundamental standpoint, ALGN clearly takes the cake. SDC clearly has more of that speculative play involved with it. But with ALGN pulling back so much recently, I would put that on my radar more so than SDC if you're looking at it from a long-term play. If you're looking at it from a short-term perspective, none of this is going to matter, but the charts that we just looked at tells us what we could expect on the short-term basis as well. So overall, SDC has an overall VST rating, which is the combination of RV, RS, and RT all into one. So it gives us a great comprehensive view of the stock on both a fundamental and a technical basis, all wrapped up into one. And it has a VST rating of 0.68, whereas compared to ALGN with a VST rating of 1.22. So based off the analysis, my money is on ALGN over the next 3 months, the next 6 months, 1 year, 2 years, 3 years, 5 years. So let me know your thoughts down below. Which of these stocks do you like better, SDC or ALGN? And with that, I hope you've enjoyed today's analysis. If you want to analyze any stock just the way we did here today, click on the link down in the description below, sign up for the trial, and you can analyze any stock at any time, anywhere. So until next time, take care, adios, and toodles.